Ladies and gentlemen, good day and welcome to Garware High-Tech Film Limited Q1 FY27 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Garima Singla from Go India Advisors. Thank you, and over to you, ma'am.
Thank you. Good morning, everyone. I am Garima Singla, and it's my pleasure to welcome you on behalf of Garware High-Tech Films Limited. Thank you for joining us today for Q1 FY27 earnings conference call. This call is being hosted by Go India Advisors. Please note that today's discussion may include certain forward-looking statements. Therefore, they must be viewed in conjunction with the risks that the company faces. Today on the call, we are joined by Mr. Deepak Joshi, Director, Sales and Marketing. I now invite Deepak, sir, to present the company's business outlook and performance, after which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Garima. Good morning, everyone, and thank you for joining us today. Before we begin, I would like to express our heartfelt condolences on the passing of Mrs. Sarita Garware Ramse, our beloved joint MD. On behalf of the board and everyone at Garware High-Tech Films, we extend our deepest sympathies to the Garware family and pray for strength and peace during this difficult time. I would also like to extend my warm wishes to all of you and your families on the occasion of India's 79th Independence Day. As we celebrate our nation's remarkable journey of progress, resilience, and innovation, we remain committed to contributing to India's manufacturing excellence and strengthening its position as a global leader in high-value specialty films. I hope you have had a chance to review our financial results and investor presentation shared earlier. Today is a proud moment for everyone at Garware High-Tech Films. The quarter we are reporting today is the culmination of years of disciplined execution, continuous innovation, and a clear long-term vision. Over the last several years, we have consciously transformed Garware from a manufacturing-led company into a global technology-driven specialty film company. We invested ahead of demand, strengthened our R&D capabilities, expanded our specialty product portfolio, built deeper customer relationships, and established a differentiated direct-to-consumer platform. Every strategic decision has been guided by one objective: to build a stronger, more resilient, and a more profitable business capable of delivering sustainable long-term value. I am delighted to share that this strategy continues to deliver. Q1 FY27 marks the strongest quarter in Garware High-Tech Films history. During this quarter, we delivered our highest ever quarterly revenues, EBITDA, profit before tax, and profit after tax since the company's inception. More importantly, what gives us more confidence is not just the scale of growth, but the quality of our earnings. This performance has been driven by structural improvements in the business, including a richer specialty product mix, stronger customer engagement, better realization, and a continued operating leverage. Revenue from operation for the quarter stood at 633 crore, growing 28% year-on-year basis. EBITDA increased 56% year-on-year to 192 crore, with EBITDA margin expanding by 544 basis points to a record of 30.30%, crossing the 30% milestone for the first time in company's history and significantly exceeding the upper end of our long-term guidance range. Profit before tax increased 60% year-on-year to 176 crore, while profit after tax also grew 60% year-on-year to rupees 133 crore. PAT margins expanded by approximately 420 basis points to 21%, reflecting the strength of our specialty-led business model, disciplined execution, and improving operation operational leverage. Importantly, we do not view this as a result of one exceptional quarter. Rather, it reflects the structural transformation of our business over many years. On the business front, demand remained healthy across our key specialty segments, particularly sun control films and paint protection films, supported by improving demand across our key export markets and continued momentum in India. Innovation continues to remain at the heart of our strategy. During this quarter, we launched our detailing kit for our existing gas network, which helps the detailing studio to complete their product basket and increase the wallet share. Our specialty portfolio with sustainable TPU-based UV printable films for complex applications, PDLC specialty films enabling privacy on demand, and graphic solutions expanding our value-added offerings across automotive and architectural applications continues to gain traction. We also continue to deepen our engagement with global automotive OEMs and other strategic customers across geographies. While we do not comment on customer-specific engagements, we remain encouraged by the opportunities emerging across both OEM and the aftermarket channels. Our strategy of moving closer to the end customer is progressing well and remains one of the key differentiators of our business model. Globally, we continued expanding our global application studio network with 14 international studios across Middle East and the United States, strengthening our direct customer engagement in key export markets. We are also witnessing encouraging momentum across Middle East, which continues to remain an important growth market for our specialty film business. However, currently our supply chain remains impacted due to war. In India, our Garware application studio network has now expanded to over 250 locations, while Garware Home Solution continues to scale steadily with 9 studios currently operational. We remain firmly on track to expand this network to 50 studios by end of FY27. We believe our direct-to-consumer platform enables us to strengthen customer engagement, enhance brand visibility, and improve installation quality and create long-term pricing power. While we continue to invest in expanding this ecosystem, these investments are expected to strengthen our competitive positioning and support sustainable margin expansion over the long term. Beyond automotive applications, we continue to see significant opportunities in architectural film across commercial buildings, residential projects, and energy-efficient infrastructure, supported by increasing awareness around energy efficiency, sustainability, and premium glazing solutions. On the manufacturing side, our strategic expansion projects continue to progress as planned. The TPU project remains on track for commissioning during the third quarter of FY27. Beyond strengthening our paint protection film business, this investment enhances our technology platform and creates opportunities to develop a wider range of next-generation TPU-based specialty products over the coming years. In addition, last quarter, we announced an investment of Rs 192 crore towards the new state-of-the-art sun control film manufacturing line, incorporating advanced robotics and automation. This facility will add approximately 1,200 lakh square feet of annual capacity and is expected to commence commercial production in H1 FY28, supporting both domestic and export growth opportunities. Another important development during the quarter has been DGTR's recommendation for anti-dumping duty on TPU-based paint protection film imports from China. We believe this represents an important step towards creating a more level playing field for domestic manufacturers and further strengthens our long-term growth potential of India's specialty film industry. Our balance sheet continues to remain one of our greatest strengths. Despite investing over Rs 700 crore towards strategic expansions over the past few years, the company remains debt-free with a healthy cash and liquid investment balance of Rs 850 crore. Looking ahead, we remain highly confident in the structural growth opportunity for specialty films globally. Accordingly, we reaffirm our guidance of achieving rupees over 2,500 crore in revenue for FY27 while maintaining EBITDA margin in the range of 25% plus minus 2. While this quarter margin performance has been exceptional, our focus remains on building a business capable of delivering sustainable industry-leading profitability across business cycles rather than optimizing for any single quarter. Over the medium term, we continue to target 15 to 20% revenue CAGR, supported by capacity expansion, increasing contribution from value-added products, and backward integration through the TPU project, the new project introductions, and continued expansion of our direct-to-consumer platform and disciplined execution. Before I conclude, I would like to sincerely thank our customers, channel partners, employees, shareholders, and all our stakeholders for their continued trust and unwavering support. The best quarter in our company's history is not something we see as a destination. It is a reflection of the foundation we have built over many years. The numbers we have delivered this quarter give us confidence. The capabilities we have built give us conviction. And that is why we firmly believe that the best years of Garware High-Tech Films are still ahead of us. Thank you once again. Over to a moderator, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Parekh from Carnelian AMC. Please go ahead.
Good morning, sir. Congratulations on a good set of numbers. Just a question on gross margins. This quarter, we had exceptionally high margins at around 60-odd%. And just wanted to understand a bit more on that, if you can help me understand. Is that something be a steady state number going ahead, or will it normalize to the 54-55% we've seen in the past?
Yeah. Thank you on your kind words. And this, margin, if I talk of EBITDA margin 30% plus, we achieved in the past, the best is around 27%, right? Even in this quarter, we have not, there is no exceptional thing. Like, I think.
I'm sorry to interrupt, sir. My question's on gross margin, not the EBITDA one.
Yeah, even on the gross margin, there is nothing exceptional. I mean, this has come purely from the performance and, from the purely performance of the company, right? There is no, I would say, any item which is exceptional, like, refunds for tariff or something. It is purely from the performance of the company. And we expect similar margins like we have given the guidance on EBITDA margin, which will be ultimately from gross margins only. So I hope we will be in this range only, depending on the quarters. Like Q1 usually is very good, Q2 is similar, Q3 will go a little lower, and Q4 back on this thing. Overall, the margin percentage, like we have seen, we will be in this range only. This is nothing exceptional on these numbers.
So generally, even a product mix can lead to better margins. So I was just looking a bit back. Q2 of last year also, we had a similar product mix of CPD and IPD. However, the situation geopolitically was a bit different. But that time, I think the margins were a little bit subdued at 53. So it's just a little bit difficult to understand that whether the 60% is only on product mix, or is there like a very high value added product have we sold in this quarter? If you can just elaborate a bit more? Because I still...
So you are right. It depends on the product mix. So three things work for us, like the summer. If in the quarter one is the best quarter for us in terms of summer, but quarter two also remains similar. So I can say whenever there is a more sun control, high IR products, we will always get better margins. That is number one. And second thing is, there has been companies' direction since last 4-5 years. We are continuously moving towards higher end products. That means we are working towards like the products which give you the highest heat rejection up to 99% of the products. These products sale gets increased, right? So you will get better margins. At the same time, the strategic focus of the company is towards architectural business. If you really see, like from 5% on margin, 5% revenue percentage of architectural is today stands more than 25%. So such kind of high-end products always lead to good margins, and we have been very consistent in saying that our aim is to go towards the products which gives more value to the consumer. We do not want to do like a commoditized sun control. Even on the sun control, we are talking to higher ends where the heat rejection go up to 99%. So all such products, there is a big product basket which is getting increased of these products, and we'll continue to see these kind of numbers in future.
Thank you, sir. That's helpful. Just a last question. If you can help me understand how has Garware Home Solutions, picked up. I know it's recently started, but just wanted a color on, how the market is looking at it, how are the numbers, and along with it, it's going to give me an idea of last year, out of 2,100 crore, what was SCF and PPF, and what was the similar contribution this quarter for these two lines?
Yeah. So last year, actually, sun control business largely remained around 48 to 50%, and balanced 25% from PPF and industrial product. This quarter, last year I'm talking, and this quarter, sun control was around 55%, and PPF was 20%, and balance was industrial product. PPF little lower because sun control really grew fast. That was one. And second thing, we faced some challenges in the raw material supply chain because of Middle East issue. Unfortunately, one of our ship got stuck in Jebel Ali, so we received some of the consignment late, and that's why we delayed. Some of the products were delayed to from Q1 to Q2. But sun control remains largely the number one product for us.
And then Garware Home Solutions?
Yeah, Garware Home Solution has just started. As we speak, we have 9 studios. But the concept, because there are a lot of work going on that segment, where we want to create a new market for we want like every home to have these kind of products because they are really adding value to the consumer. So when we do these kind of things, it's a new market creation for us. It's not something, if you have a home, you cannot go anywhere and buy some films for you. Like you can buy a glass whenever you want, but film you cannot buy. Because even in the advanced markets like US and Europe, we have seen these kind of difficulties. So that's why the company thought of a different concept where you can do all those things directly online, right? For that, a lot of work has been done. A lot of, market creation is being done through digital media, order now from system. All those work is going on. So it's a very steady, but it is. We expect that these numbers of number of studios to go 50 by end of this year. And I can't give you as of now the guidelines on the total peak revenue, though we have our targets in place. But these are going to go substantially big in our product portfolio. So we want to do something which nobody has done into the market till date in the film side, especially on the home or the home buyers.
So will this be a B2B or B2C focused segment?
It is 100% B2C business. It is direct to consumer.
Got it. And so any idea on US demand right now in Middle East? That's the last question. Like how are you looking at things on the ground in both these geographies?
in US, our global in US, the sale through e-commerce is continuously rising for PPF. And for our dealer, distributor, and order flow is really strong. That we have seen in Q1. I think that is one of the reasons you see very strong numbers for us, because we focus where it really makes sense into the market. And US market is really doing great, and we expect that continue to do so. And Middle East, actually growth and demands is really big, but unfortunately we are facing some challenges sometimes on the deliveries, because its situation is every week there is a change in the situation. But we expect, we are talking here, 3-year, 5-year horizon, these two are like one of the fastest growing markets for us, including India.
Thank you so much, sir. All the very best. I'll get back into you.
Thank you.
Thank you. The next question is from the line of Aman from Stallion Asset. Please go ahead.
Hello, I hope I'm audible, sir.
Yes, you are.
Yeah. Thank you so much for the opportunity, and congrats on a great set of numbers in a challenging environment. I have two questions, sir. Number one, if you can update us on the tariff refund claims, how much have been received so far, and what's the balance amount we can expect going ahead?
Yeah. So, the quarter one where we are discussing currently, there was no impact of tariff. I mean, we didn't receive anything in the quarter one. However, we have received roughly 30 to 40% of what we are expecting in quarter two. And this will be taken into quarter two performance, right? So quarter one performance is purely on the company's real natural performance. So there is no change on that. So that's one thing. And I think we hope like entire refund will be done in quarter two of this year.
Understood. Got it. And my second question, sir, with our D2C initiative gaining traction globally and also on the domestic front with the support of anti-dumping duty, our premium product mix are improving, and just being a manufacturing B2B company alone, now we are seeing evolvement of consumer-facing branded as a share improving for us. How should we see, sir, structurally growth for the next 2-3 years for us? Are we entering into a higher growth phase sustainably, sir?
I would say yes, because like we said, we are very confident of 2,500 crore plus for this year. And going forward also, we will maintain 15 to 20% guidance which we have given. So we can say in 3 to 4 years, we are going to touch 3,500 crore. I mean, this is our estimation, right, based on the current situation. And our margins will definitely be 25% plus on these things. It can go. We'll try definitely to go higher and to reach the current numbers, because this has been very normal what we achieved this quarter. So similar things will continue for us. Now, D2C, why? I mean, let me tell you, this company is now we are thinking we have built a manufacturing excellence. We have R&D excellence. Now, then what happens is you compete, you continue to compete with your peers. Like, I can't name them, but take up top 3 companies in US, right? People compete with them. But our strategy is different now, because if we keep on competing, we will get share and sometimes we lose also. So we are now trying to create a different market for us. That means when we compete, for example, there is a film called safety film, right? There are standards of that, A class, B class, and some other class. So what we are trying to make a class which is not made by anyone till this time, right? It gives you a very different experience from what we got into the past, right? So these kind of creation into the market is making a very unique proposition for Garware, right? So this kind of awareness and I would say creating our own market will really help, especially in US, Middle East and India markets. There is a very low awareness into architectural products. So we are now trying to compete these things even with the glass companies, like what they do and what we do. So we need to create market for that. We can't just keep on taking share from others and grow, because there will be a limited growth. If we want to really grow 3,500 crore and beyond that, we need to think differently, where we give alternative solution to the glass. So that kind of thinking company is working on. The growth, whatever comes naturally, is great. But on top of that, we are creating this kind of environment within our company, manufacturing setup to that kind of growth. And we are very confident that we will be successful in that because we are already seeing this kind of positive traction towards this growth.
Got it. Super. And so just one last thing on the TPU line, when it gets commissioned in Q3, how much more margin expansion we should expect in FY28?
Yeah. So we have given a guidance of 1.5% to 2% for after this line comes into stream, of course, for FY28. So the guidance is already given to that. But our aim is to make newer products out of TPU, which let me tell you, out of this, 3 products are already in target, and some of them have already been, I can say, trials and discussions have happened. So as soon as the line comes, we are ready to take it off.
Understood, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Yeah. Thanks for the opportunity. Sir, condolences on loss of Sarita ma'am. And of course, very good set of numbers, and the journey has been amazing for last 3 years. So congratulations to the entire team at Garware. Sir, my question is, So my question is regarding the first question. You mentioned architecture films is already crossed more than 25%. So basically, that means in this year, and this is for Q1, I'm assuming. So this year, we are already in the run rate of around 600 crores. Is that a fair assumption? So going ahead, how do we look at architecture film, which is supposed to be our highest margin product?
Yeah. So like I said, the company's focus is towards that only. So we are just trying to make an infrastructure where we do, compete with the, our philosophy is where there is a glass, there can be a film, right? If it is a high rise, it can be a safety film. If it is like sun facing, there can be a sun control film. If it is interior, there will be a decorative film. And if it is a privacy, there will be a PDLC film. If it is a bathroom, there will be a different kind of film which protects glass from shattering. So we are now working on this strategy that wherever we get opportunity, we directly compete with that, like a glass and a glass with film. What difference does it make in terms of value proposition, in terms of the heat rejection, in terms of UV rejection, and ultimately the impact on environment when you produce a glass and when you produce a simple glass with a film. So we are really getting very encouraging results. So this remains the number one portfolio for us in terms of growth. So where the company is fully focused on. And these architectural business is really supported by TPU as well, where we have various kind of architectural products made by TPU, which we will see shortly, maybe from next year onwards, we will see traction of these products from next year.
Sure. So, sir, going ahead with your TPU expansion getting completed in, say, October, and whereby 25% of it will be for external sales being used. And then STF also coming in the first half of next year. Plus the PPF line which came in September 25, given what you have mentioned in the answer to one of the previous participant questions. So can we look at because of all these expansions going full throttle, do we expect a 3,000 crores of around top line for FY28? 3,000 crores plus?
Yeah, we can see, we are here to, definitely I have given you the guidance that in next 3 to 4 years, we will be somewhere around 3,500 crore. So of course, in the journey between maybe 2 years after, we can see 3,000 crore number that is in horizon, yes.
Sure. And what is the current utilization of PPF, sir?
Utilization?
Yeah, the utilization of PPF, the new capacity.
Yeah. So PPF old is running almost 100%, and the new one is running at the rate of roughly 60%. We lost some volume last quarter because of some delays in the shipping, because I would say ship got stuck in Jebel Ali because of the war. I mean, it got stuck. So that's why we lost some of the volume, but that we will recover in the coming quarter.
Sure. Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Swechha Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, am I audible?
Yes, yes.
Okay. So typically for architectural product, what is the margin? Because they are the highest margin products, right?
They are highest if you talk of the top to top. That means, if you talk of very high-end IR rejection on automotive versus architectural, yes, they are the highest one. But they also have like the products which are like you just want to cover your building and all. So if you talk of like apple to apple, same kind of, properties, yes, this is the highest margin product.
Okay. So what I assume is overall the architectural segment that we will be doing, the margins would definitely be north of 25%?
Yes, definitely.
Okay. So the reason I'm asking is because, you have guided us a margin of, you're saying that we'll maintain a 25% margin, but what I understand is, and correct me if I'm wrong, is architectural segment will obviously command a margin of 25% higher blended overall. The TPU line that is going to come, that will add 1.5% of extra margin. Plus, yeah. I believe the products that we'll do in the TPU will also be some specialized product, which will also, they will also themselves command some higher margin. Plus, the new SCF line will also, it's an automotive robotic line, will also increase your efficiency there. So I feel 25% margin, you are just being too conservative. Am I correct on that?
We are happy to say that we are conservative because we have seen times when something unexpected comes into the market. But definitely, if everything remains good, we'll definitely going to perform what we have performed now. Because, like I said, this people are like, many people anticipated like these margins might be because of some exceptional thing has come from US and other thing. That's why I've clarified this is purely a performance, nothing else. So, of course, we will. When I said 25% plus minus 2%, so 27-28% seems to be a very logical number for us. But since we have given the guidance, we'd like to maintain that. Definitely, we will perform better than what we have said.
Okay. And sir, this SCF of 191 crores, what would be the asset turn? Peak revenue that we can do from the SCF line?
That will be roughly 500-550 crores.
500,
top line.
550 crores. Top line, okay. And then from this SCF, sir, how much we plan to do for the automotive and how much we plan to do for the home solutions, like a broad mix?
See, ma'am, what happens is these lines, normally we have already 5 lines, right? This will be like a 6. And then we have PPF lines. So we have like many. So what we do is we focus our team, sales team focuses on their own because we do not have any mix. Like I said, our sales team in terms of architectural is very different from automotive because their way of thinking, like I said, where we need to compete is like very different segment. We need to think of a glass manufacturer kind of thing. So So when we go into the manufacturing, they do their job and put their growth on. Then we decide how do we allocate these production into how much maximum we can do because we need to take advantage of the operational excellence. So I can say whatever the number we say, like 25-30%, now this will go to 35% architectural. So all new lines will take 30% of that because this is how products are manufactured in our company.
Right. And so we've mentioned that new products on the TPU, the ceramic coating and other products that we mentioned in the presentation.
Yeah.
Are these all products on the home solution side?
No, ma'am. Like when
Okay.
we talk of, they are like, so some of them are home solution means whatever you can use in your home. Like ceramic coating and graphene coating, they are on the automotive, on the car, right? So in home solution, you will see sun control, you will see surface protection, that means sofa and all those things. Then you will see like coating for the doors. Then there will be many products which are actually used in home. Yeah.
Okay. So these products that you mentioned in the presentation on the TPU side, can you help us understand what is the addressable market size for the products that we plan to launch on the TPU side? Because the line is going to commission in Q3, right? So what is the addressable market size there?
Actually, honestly, for TPU, such kind of products, as of now, in India, there is I can say you need to create a market, because these products are like for when you compete with the substrate PVC versus TPU. So TPU is a much better product in terms of environmental sustainability, in terms of stretchability, in all those things, right? So currently what we produce, the market size is much bigger. We can talk of something, like I won't be surprised if I say like this is easily 1,000 crore, but we need to really get there with our products and the timeline, right? So and that will grow, because it's not something, as I said, we do not do anything. If you see our company history, we do not do something which is already available and we jump and take share of somebody. We really need to. That's what we have done when we did the PPF, right? We created a market. People initially were skeptical of that, but finally they believed that there is a market of PPF. Now whole world wants to jump into PPF, right? Similarly, in sun control, now on TPU, right? We know because we see the trends all around the world, and then we see what better can be done, even from the US and other players. How can we do better? Because our R&D is a very unique proposition. They think much different than the market. So let me tell you, this total addressable market is like very big. And we may not be able to supply in the initial years for that. So that's how we see this market.
Right. And so can you give me geography-wise sales mix for the CPD division for this quarter? And what was it, in FY26 Q1, both value and volume-wise?
I think that if you can write to...
I'll take it. Yeah, I'll take it separately. No problem. And so what was the... Sure. So and what was the sales for Garware Home Solutions in this quarter?
See, that is actually just the beginning, very minuscule, let me tell you. But that is going to gain traction. So we have internal targets for next year and year onwards. So we'll talk going forward on that. But that is going really, really well. Okay.
And so two small clarifications, sir. So you said you're going to open 50 or 15 stores in FY27 for home solutions? I couldn't get that. 50, right? Okay. And sir, for the tariff refund, I didn't quite understand that. You said in Q2 we are going to get the entire tariff back, or just the 30 to 40% of what we are likely to get? Just that clarification I wanted.
We will get full in Q2. That is my expectation. I said till date we have got already.
Okay, till date we've got. Okay. So could you...
not included in any of the performance, because this has happened in the month of July and August.
Understood. And so would you be able to quantify this number? What are we expecting in Q2?
See, the thing is, whatever refund we will get, we need to share with our customers in US, some of them. So if you talk of net number, I expect anywhere around 50 crore plus should be with us.
Okay. Thank you, sir. Really appreciate this.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Pratham Kankaria from Quantum AMC. Please go ahead.
Yeah. Hi, sir. Just one thing. So firstly, condolences on the loss. So with GHS, you're moving closer to the end consumer. So can you elaborate, means how this strategy could impact our existing distributors and installers? Like you're moving from distributor to this, not moving, but you're kind of shifting some of the model. So have you witnessed any resistance from channel partners, and how do you plan to maintain this engagement?
Yeah, definitely. There were some resistance from all of them. But what we explained and what we have successfully done, they are doing better business than what they used to do in the past, right? That's the one thing we have ensured by various engagements, that they continue to do better than what they were doing. So one of the example, like GHS products are very different as compared to your normal sun control distributor model, because honestly, the distributor in the past we have seen, they are, a couple of them are really good, couple of them are just stockists. They just stock the material and send. And the company's vision of growing and growth and everything mindset, right? Some of them were not able to get along with that. So unfortunately, we had to take tough call on that, right? So we had to honestly shut some of them down, right? And that really helped the company to grow. If you are seeing this growth in last 3-4 years, this is one of the reasons that we wanted people who are dedicated and passionate, like our team is, like the company is, right? So we had to take a tough call, and we don't shy away from taking such calls. So that's number one. Second thing is, the product line in Garware Home Solution is entirely different. It is directly controlled by the company. So that means these products are very different in terms of their properties, in terms of their transmissions and all those things. So that's why there is no direct conflict. Now we have made sure that this happens, right? So this is the way it is working. Now some of these guys have already, like some of our channel partners, they want to become GHS also. So that also we have ensured that they get the enough chance to represent that. So that's why we have made it win-win for both of them.
Okay. Thanks. That's very elaborate. Thank you.
Thank you. The next question is from the line of Sriram from iThought PMS. Please go ahead.
Thanks for the opportunity. What do we look for before partnering with any interior design stores or firm for setting up our Garware Home Solutions?
Sorry, I didn't get the question, please.
Yes, sir. So when we are setting up a Garware Home Solutions, partnering with any interior design store, so what do we look for before deciding the partnership?
Okay. So what we look for, because this is a business which is related to retail homes, right? So that's why we look for partners who are already, they have a presence and in home furnishing or glass or something which they are already doing in that segment, where this film complements the home solution. So that is the primary requirement. Along with that, we check, of course, the other legal things like financials and all those things. But the primary requirement is he should be influential or very well connected with this kind of business, which comes, like I gave you example of furnishing, glass, and other interiors, bath fittings. All those things are a natural fit for us.
Right, sir. And in PPF, apart from M&M, do we have any other OEM have authorized us? And are we the only PPF company that has been authorized by these OEMs?
See, we have like 5 OEMs with us, and some of them we are the only one. And some of them, there are all. Like some companies have a policy that they do not have one vendor. So for that, they have another one. But we proudly say that we are the only official high-quality producers in India. So that is the thing, which is make in India is the key thing for them. So that's why we are a preferred supplier for many of the OEMs.
Thank you, sir. And the last question is connected with Garware Home Solution. Is it the model is typically what we did for PPF Garware Solutions, like we just give the products in discount to the partner, and what else is our contribution with that?
See, this is a little different model. Garware Home Solutions. In Garware Application Studio, it's a dual model where some products are directly supplied by the company, some products are supplied through the distributor. But in Garware Home Solutions, it's totally different and fully controlled by the company, right? All revenues and everything comes to company, and company then distributes it. So that's the basic difference, and it is a much more, I would say, growth-oriented, aggressive, and that takes the company's strength into top, and then people the product line is very unique, which is not available into the market. That makes a unique solution for company and the partner as well.
Understood, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, everyone, and congratulations for a very strong set of numbers, and condolences on this Garware's passing away. So my first question, Deepakji, is that I think we have started focusing on the B2C part significantly. I think in last call you had mentioned that by FY28 that part will become 200 crores, and margin there is significantly different. So when you say B2C, does it mean the PPF India plus PPF International and Garware Home Solution all put together?
Yeah, actually, yes. A D2C model is right now already running in US and already running in GHS. So we are expanding that to other territories as well. So in fact, this business can be even bigger because now we are putting more efforts into that. So it can be bigger than 100 crore. Because we have seen the success in last even 3 months as well. So we are seeing a much better traction into that business. So definitely it can be bigger than that.
And second question, I think you talked about the new product based on TPU. I think PDLC and graphic we have already launched, and maybe a couple of more products, ready to commercialize. So again, we have had a very strong capability of developing product and then scaling up as demonstrated earlier. Do we think that each of these products that has 400, 500, 600 crore kind of a scale-up potential, and that is how you choose, or some of these are very niche products and some are scalable? How do you look at the entire product set that you are developing?
See, if you are talking specifically about TPU, so if you give us 3 years timeline, definitely this is a scalable beyond 500 crore business. There might be more capex needed for that, which we will do in time, right? So as of now, the focus is to commercialize both kind of products. It's a mix of some of them are like a high volume product. Some of them are a very niche product, right? But both quality remains at the top end of our mind, right? So that's how we design the product. Yes, it has got a potential beyond 500 crore. That's how we are targeting 3,500 crore in coming years.
Got it. Thank you, and sure.
Thank you.
Thank you. The next question is from the line of Dikshi Jain from InCred Research. Please go ahead.
Hello. Congratulations on good numbers. My first question was regarding the raw material prices. How have the raw material prices moved in the last quarter, and how much effect are we seeing on our margins because of that?
See, raw material on our consumer products, there is like the real impact. If I say correlation, if I talk, it's only 10 to 12% direct correlation with the top end raw material, right? Because there are 10 components which we manufacture on our own, right? So their raw material to the end product ultimately reaches only to 10%. The rest, there is a value addition, there is a lot of effort going on inside the company, so there is hardly any impact. But at the same time, when it is a direct impact, like when the crude oil chain, naphtha, xylene and all those prices increase, so raw material increases, that kind of impact is directly passed on to the consumer. Of course, after talking to them, convincing them, there are negotiations, there are discussions, but that is taken care of. So there is whatever impact was there, definitely that has been taken care of. See, we are no longer company commodity where your raw material, if prices increase, you will take advantage, and then when it goes, you will take a hit on inventory. So we are like beyond that. We don't directly, like I said, the correlation has only remained till 10%.
Okay. Next question is regarding a white labeling business. How has the mix changed for export for white labeling compared to our products in the last 1 year?
So both have got a similar kind of growth, right? Because that is again a key part of our strategy, where we remain very high quality producers for our customers, right? And they have been added into different geographies in the last quarter, but we also added a lot of Garware and global brands. So put together, I see similar growth. I don't see any change in like they have grown faster or we have grown faster. So it's like a similar what we have seen.
Okay. Thank you for taking the question.
Thank you.
Thank you. The next question is from the line of Deepak Ajmera from IGE India. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on good set of numbers. My question is we witnessed margin expansion in this quarter as addressed previously. So apart from, let's say, product mix, is there anything else as a major driver behind that?
No. Like I said, this is like in terms of, you are asking whether the performance of 30% plus EBITDA margin has come from some exceptional items, if I understood correctly?
So I want to ask, apart from product mix, has there been any other contributor which has contributed into margin expansion?
Not really. If your question, this margin expansion normally has happened because of better product mix. But at the same time, when you say better product mix, you are talking of a same basket where you choose the better products. But here, the strategic focus has been towards like high-end products. Of course, that is again a product mix, and the shift towards architectural business for us. So these two, one is the product mix, and then strategic focus towards the growth, where we are creating market, making awareness, and selling more of such products, right? So that's the reason of margin expansion.
Got it. And since our new lines are coming into Q3, but yet we are guiding towards 2,500 kind of revenue, which let's say quadruplate this quarter. So are we not expecting any kind of, let's say, contribution from new line in this year?
No, because if you really see this TPU line, which is coming in Q3, so that is mainly 75% goes to our PPF, right? That's a backward integration, which will add to market expansion. That is one. And second thing, 25% is earmarked for the new products, and on their success, we will plan the further growth of the company, right? So if you really see, there is no material impact in this year in terms of volumes, because only TPU is coming this year. Now the next is Sun Control, which will come next year, which will hit next year, FY28, which is H1 of 28, so say almost a year from now. So that will definitely add, which we have given already the guidelines that we are going to grow with the minimum average CAGR of 15 to 20%. So we have taken account of these things. Right, and just to remind that we are not a typical commodity company where one line comes and suddenly your volume will jump and margins will drop or revenues will increase. We are focused on a very high segment specialty product. The company's growth, whenever we are talking of these like 2,500, 3,000, 3,500 crore, these are all a very special product with a similar kind of EBITDA margins. Right, so our focus is not just to run the top line by putting a line and sell the product at with the competition at a price war. All the products which we are producing and will produce will remain to be very niche and special, which will give a special experience to our consumer. That's the thought process.
Okay, thank you.
Thank you.